Let's go out to Philadelphia and speak with John. John, thanks for calling. Thanks for holding. How are you today?
Hey, Steve, thanks for taking the call. Before the show ends, I wanted to ask if you could help me with the DES futures contract on the S&P. And my question for you, Steve, is this. The decline that occurred from Monday, December 3rd, when we had that gap up in reaction to a trade deal coming out of Buenos Aires, we had a decline of 28.14 to yesterday's low at 25.83. My question is the bounce that has occurred since, is that conceivably the entirety of a correction with a C to D leg heading lower to take out lows right now? And if you can see that case, could you do your chart work where you do those nice A, B, C, D or 1, 2, 7, 2 projection targets on that formation, please?
Absolutely. We're going to go to a break. Are you going to hang on or?
Yes, I sure will. Thank you.
Okay, absolutely. So we're going to go take a look at the ES Mini. We'll take a look at some A to B equals CD targets. But I would tell John, if you were to ask me tomorrow, maybe about 10 o'clock in the morning, because of the next apogee lunar phase at 7:26 a.m., I'd have a better idea. Philly, we're going to answer the question: is it possible that today's rally to the upside was the extent of the rally and price would continue lower, and if so, where to? And the answer is it is very possible, because we saw price get up to Stevie's red line. Now, this is different than Disney's red line, because that Disney red line was taking place shortly after the oscillator and change line. That's really what Stevie's red line is, turned from green to red. This has been red for quite a while. It means our price oscillator is below zero. Nothing more bearish than a falling price oscillator below zero. However, nothing more bullish than a bullish hammer candle occurring at a pattern. In this case, there's multiple patterns. Price moving lower, doing less relative energy yesterday, getting down to wave count number 7, in our case, letter G. So here's the clash between the bulls and the bears. The patterns that I see out here, John, are two from the downside action, or let's say one from the downside action, one that is sideways right now, and that is the consolidation. I see a clear consolidating pattern inside the ES Mini from the October 16th, October 17th high down to the low on October 29th. That was what was tested yesterday. We saw that was a hammer candle. That's the second one in the last 4 days. Tells us the ES Mini or buyers are trying to hammer out a bottom. We'll find out whether or not they can. If we get a close now below this consolidation area, below yesterday's hammer candle, we would then have a measured move equal to that, equal to or greater. Well, now if we put that together with the only A to B equals CD pattern that I believe exists out here, and that's coming off of the high from October 3rd, down to the low on October 29th, to the bounce up into the high on November 8th, the 1-to-1 level takes you to 24.76. But the 1 to 1.272, which is one of the things you talked about or asked about, would be the equivalent of that measured move of that consolidation break. And that price point would be 23.83. So it's going to be all about, I'd say, yesterday's low at this stage here. If we see a close below that, then I think that then says, yes, you could see that move to those two levels. Does that help you out?
Steve, thanks for sharing the data. I do appreciate it, sir.
My pleasure. Thanks so much. Folks,